Well, the bank balances are effectively available in real time. At any point in time, you could go look at the token outstanding balance. Well, now if you think about both of this information is available in real time, we could actually report on this as frequently as real time too. So when we talk about real time proof of reserves, this is what we're talking about.
Proof of reserves and financial statement audits. Two approaches to financial transparency, but wildly different in cost, frequency, and scope. But which one is better for your customers, for regulators, or your company? Let's explore the fine print in today's TNF Takes. Welcome to TNF Takes, the go-to spot for crypto companies and on-chain organizations. Before we dive in, make sure you like this video and subscribe to continue getting top-tier content and insights from experts who have been around the block. I'm Noah Buxton, and I'm here with Nick Ward and Jeremy Now from the network firm. We're here to help you establish trust, build efficient crypto operations, and stay ahead of the curve in an ever-evolving industry. Good morning, gentlemen.
Another great TNF Take episode up on deck. I love this topic, so I can't wait to get into it.
Ever since Mt. Gox, exchanges have looked for ways to demonstrate trustworthiness to customers, regulators, and other businesses. Some folks in the crypto industry today might not even remember Mt. Gox as a business. But in about 2014, Greg Maxwell proposed a solution that intended to confirm that the exchange actually held all the assets on behalf of the customers, just as they purported to. And this really took off many years later after the collapse of FTX.com. And even more companies like Binance and OKX, and even most recently, River Financial, started demonstrating their reserves in a sort of management, self-attested way on a monthly basis. However, if you go back to the end of 2022, it wasn't without drama. Liz Warren came after auditors performing the service, calling them quote unquote sham auditors. Additionally, the PCAOB issued an investor alert and a statement even from the chief accountant at the SEC, warning firms that they could be liable for performing this service for clients. We're doing a CPA attested proof of reserves. And so by the end of 22 and the start of 2023, when proof of reserves was widely known, desperately needed, auditors were largely unwilling to provide this service. So with the market heating up, Bitcoin over 100K, and new retail investors coming into the space, is proof of reserve still relevant? Is it a replacement for financial statement audit, or a valuable supplement to financial statement audits? So let's compare the details of each to get a further understanding.
Yeah, it's crazy. There was like a proof of reserves bull market right after Gox. Then there was a bear market for like 6 years. And then after FTX, another bull market. So it's unfortunately, proof of reserves becomes popular about 2 years after a big blow up that affects the whole industry.
Yeah, I think it's really unfortunate. It's kind of one of the potential skepticisms that people have too, right, about it, is that it isn't quite baked in yet from a regulation perspective, right? There's not sort of that floor on proof of reserves where it's widely known, it's very standardized and used by all companies. So yeah, it's had its peaks and valleys for sure. So I think, all right, let's get into it. So Nick, take us through, let's do financial statement audit first. Give us the lay of the land, the quick reminders for management of a crypto company. You're thinking about a financial statement audit. What is it?
Yeah, it's a good level setter here. So financial statement audits really are taking, an auditor's going to come in and assess your books, right? All your records as a whole to ensure that they're free from material misstatement is kind of the technical term. So what that means is, hey, these are generally correct. We don't see any large variances in terms of what's missing. They followed the standards is the other side of it. So there are standards set by the AICPA or public company standards, PCAOB. And so those are accounting standards that dictate how you recognize certain things, right? Not everything is straightforward in terms of assessing your accounts. There's some things, there's nuances, right, that need to be calculated. And that's where all your disclosures come in explaining that. And so the auditor comes in to make sure not only are the numbers reasonably stated and correct, but you have all your disclosures required to give the readers of the financial the full picture of the company.
And Nick, does that include crypto assets or custodial assets in the financials or no? Because I've heard varying things here.
Yeah, typically for private companies, the answer is no. Public companies too, until the SEC put a rule in at the end of 22, I believe, that required them to put that amount they custody on their balance sheet, which would then bring them in the scope of the audit. But for the most part, the answer's been no, which frankly wasn't much different from traditional finance sectors where companies may be escrowing customer assets on their behalf. They didn't have those on the balance sheet either. So I think we'll get into the little bit of nuance there where that really matters. But the answer generally is no. I think to date, we're starting to see it a little more that.
And I mentioned PCAOB and you mentioned private company and public company. So just break that down real quick. PCAOB, Public Company Accounting Oversight Board. This deals with public companies, their financial reporting, and the regulation of auditors and the standards that auditors use to perform that type of public work. Public trust, very important space, lots of standards around that, lots of oversight. And then private companies, which are largely performing or issuing audited financials under AICPA or American Institute of Certified Public Accountants standards, right? So I think what we're talking about today is really more in the AICPA private company land. We might reference a bit of public company standards or ideas, sort of themes, but really there's one public company out there that should be doing proof of reserves. That's Coinbase. And the other public companies that are in crypto are really Bitcoin miners and or public funds at this point, ETFs, right?
Yeah, no, that's a good point. And maybe one other nuance to add there is public companies, obviously everyone can see those financials. They have to put them out into the public, right? Because the intended users are investors, which could be anyone or potential investors. Private companies is almost completely the opposite, where you're typically not going to see a private company's financial statements. Those are just going to go to management, maybe investors if they have them, but otherwise not going to be released to the public. So I think that's an important nuance as we get into this discussion.
Okay, so Jeremy, take us through what is proof of reserves then?
Yeah, proof of reserves is essentially a limited scope look at just the customer assets held in custody on behalf of customers of an exchange, a stablecoin issuer, an ETF, a custodian, and making sure that those assets held on their behalf are sufficient to cover all the liabilities or the IOUs issued by that company. So I think people it's confusing to begin with, but if you break it down with an example, I think it becomes a little bit easier to understand. So let's say when I go to Coinbase and I want to start using the platform, I might deposit 1 Bitcoin. So what happens is that I'll deposit 1 Bitcoin into a deposit address, and they're going to sweep that Bitcoin into a big commingled wallet with everyone else's Bitcoin. And what you have effectively is an IOU as tracked on Coinbase's database. So now you have an account, you have a ledger credit on their database. So what does a proof of reserves intend to provide a comfort over? Well, it's if you sum up those IOUs or those credits on a database to all customers, if you sum those all up, those should be less than the assets actually held in custody on chain by Coinbase. So it's really a customer asset versus customer liability reconciliation. And it's so if you think about it, what Nick just said is that the scope of a financial statement audit is, you're covering the company's, all their operations, their HR, their payroll, their, all these different things, right? But proof of reserves is a limited scope. It's really just a magnifying glass on the customer assets and liabilities. And it doesn't really worry about kind of the other processes in a business where you might worry about them if you're doing a financial statement audit. Because think about it. If you're an investor, you're going to want to know, what's my company's revenue margin? What do their taxes look like? You're going to want to know all these details. But if you're a customer, what do you actually care about? Well, you want to make sure that they have your money on your behalf. And if there was a problem, like bankruptcy or something, that those aren't going to get sucked into the whole process. Proof of reserves is intended to be that fine-tooth comb to really look at that key part of the company's operations.
So I think that's a super helpful explanation, and it's kind of from the retail customer's view of understanding it. If I'm, management, if I'm a CFO, and I'm thinking about how does, this potential for proof of reserve, somebody in the organization product or, wants to start adopting a proof of reserves program and get it attested to. How do I think of this from a CFO's chair? Is this completely separate exercise than financial statement audit? Are there things that can kind of be in the middle of a Venn diagram? Maybe they overlap a bit. Is it like a subsection of a balance sheet audit? Is that a fair way to describe it?
Kind of, yeah. So if you've heard of the statement of digital assets, it's becoming like a popularized term. Essentially, what that is a schedule of your crypto assets that would be on your balance sheet that are typically consolidated if they're going to be on your balance sheet for an audit. It's broken down. So proof of reserves covers that asset side, but it also covers the customer liability side too. So it isn't, a pure one-to-one check. But when you think about like from the CFO's perspective, proof of reserves is pretty interesting because it actually, like when we get into these companies, they don't realize that, wait a second, we haven't done this exercise, and it's actually probably the most important exercise we can do as a crypto custodian. They might not have worked with the engineering team or the custody team, right? During their month end close process. They're worried about closing the books. They're like, wait a second, well, what are these numbers that I'm reporting, and kind of verifying them with the other side of the house? So it takes a lot of cross collaboration that typically doesn't happen in the org. So one of the key benefits alongside with the reporting is actually prompting the company to get the communication and the processes in place to actually be able to prove this to themselves, right? Because sometimes they don't even know if they have all the assets until someone goes in and beats up the process a little bit.
Yeah,
Yeah,
we've
I
seen
think
like a wide set of, sort of very mature environments all the way to maybe more startup and just kind of getting the tools underneath them. But I think that's a really good thing. It's like financial statement audit time. Everyone's running around like a chicken with their head cut off, asking for evidence here and there, but that doesn't build any process within the organization, right? That doesn't build any sort of cadence of reviewing or control, reporting. Like proof of reserves programs, what we've seen honestly in practice is that, yeah, this exercise really creates cross-departmental collaboration. It creates the ability to then put control and process around that. Yeah, and just it's very interesting to see clients open up the communication through this process and say, wow, yeah, like this is great. Finance is working with product and product is working with engineering. But engineering has a subset of people that's a database management team. And all of this is coming together to provide the
yeah,
proof of.
one of the original questions there, right, was is the CFO's view, are they crossing over with the audit? And I would say we hope so, right? But if that's not always the case, then hopefully going through the process builds those routines similar to a financial statement audit, right? Typically at the end of the audit, we'll come in and say, all right, here's our recommendations, here's the controls you need to improve, let's get those going. And as Jeremy laid out, for proof of reserves, it's just as important, and we can really hone in on that specific scope, which is ultimately the backbone of any custodian or exchange.
Yeah,
All
I
right.
always
Now,
ask our companies, I always ask our clients who do proof of reserves, hey, like, what do your financial statement auditors like? Do they do the same thing that we're doing? And it's never been, oh yeah, they do all this. They always say, oh wow, like we haven't done all this before, so this is a new experience for us. So it's kind of scary in some ways because people kind of think financial statement audits cover all this stuff, but in practice, there's a lot more to demonstrate in a proof of reserves.
these are all incredibly important points. Like, I want to get to the details of like, sort of comparing and contrasting, across a few buckets. But like that last point you brought up is so incredibly important. It's like, unless you've done this exercise, either from a professional a service provider view, an independent CPA view, or you've been on the management side and gone through this exercise, you can't appreciate necessarily its differences from other exercises that you've been through. And we'll get to why, because of some of these detailed points like the in-scope coverage or the level of testing, right? But I think there was just an article, it's not crypto, but Macy's, right? KPMG is the auditor, I believe, and Macy's, what was the number? It was a very large number of fraud, sort of not found during the last audit, right? I don't want to misrepresent exactly what it was, but these cases come up over and over again, right? Where a Wall Street Journal article says, oh, $1 billion in fraud, and the audit didn't catch it, right? And people sort of misunderstand what financial statement audit is. They sort of immediately give it this incredibly high level of assurance. Oh, it's a search for fraud. It's it's all these things that it might not actually be, right? And so, yeah, it should be represented for what it is, but very focused approaches might be very valuable too, right? So, all right, let's get into some of the details. So, if I think about like maybe the first one is sort of the testing that you would do. Let's talk through that.
Yeah, I think Jeremy's last point, right, was perfect into this one where, hey, he's asking auditors, like, have you ever gone in to look at the proof reserves? And their answer is no. And that answer is no for a number of reasons, right? We talked about, do they have the customer assets on their balance sheet or not? So that's a big one for the auditor, because ultimately well, there's risk there, and we would hope, and when we're doing audits, we definitely look whether they are or not. But the focus is on the statements at hand. So let's just assume they're on the balance sheet for this exercise. So then the auditor's going through and saying, all right, what are my largest accounts, risky accounts, because that's what we're going to test. And then they take a sampling approach, which really is just an exercise. To put it simply, it's an exercise to determine, all right, if I have so much revenue, I'm going to make a sample selection of, say, 50 to 100 of actual revenue transactions and go ahead and test those, meaning prove these happened. So that's, showing me an invoice, showing me the cash getting paid in, a number of different steps that could verify that. But ultimately, if those 100 samples come back clean, they're likely going to determine that, okay, the balance is, all this revenue is generally good, and we'll move on. So for a proof of reserves, right, with customer asset liabilities, they may just say, all right, you've got customer assets on the balance sheet. We'll test a number of them as long as those are recorded correctly, then we'll move on. Versus the proof of reserves, right, which is generally 100% of that. Maybe Jeremy, you can expand on that approach.
Well, and if you think about, so going to your sampling, right? So if they select the samples, that sampling approach differs across auditors. Per their asset coverage, I mean, it's different for every audit firm, right? Their risk tolerance, but it could be lower than 50% of total assets. It could be lower than 30%. It could be lower than 20%. Like, it could be a very small actual amount of asset coverage that you're getting. And I know on the revenue side, usually the transactions, the samples are, less, maybe 100, right, out of millions of transactions. Like you said, right, like, it's reasonable assurance. It's not absolute assurance. So in a proof of reserves, however, though, it's demonstrating 100% coverage, 100% of your assets. So, if we were to think about, if your key focus area is wanting to know, do you have all the assets? A proof of reserves actually gets the tick mark on this because it's validating 100%, right? Versus a sampling approach, in my opinion.
Yeah, and that was perfect how you said those words. Not absolute assurance. Nothing in CPA land is absolute assurance. There's no product for that. And then you said reasonable assurance, which is really a technical term, right? So this, we use as accountants, reasonable assurance opinion. And Nick used the keywords, right? That the financial statements aren't materially misstated, right? Or they're fairly stated in all material respects. There's a couple flip-flops of that depending on what you're doing. And then you said, okay, well, 100% testing. So let's tie that together though, because the way we've performed proof of reserves is under an agreed upon procedures standard, right? It's a type of attestation report and standard, and it is a no assurance vehicle under the CPA land, right? So it's, nope, that doesn't mean anything. Well, it's not exactly what it means, right? It's no assurance. However, I think of it as self-evident in many ways, right? So there's some things that if you test everything, if the procedures are sufficient and you can see all of the findings and you can understand the report, you have enough background knowledge to go through this and see it. I mean, it is self-evident is kind of what I think. So yeah, from a CPA perspective,
the reason it's not, there's no opinion attached is because management or the intended readers of the report, the procedures are determined by them and have to be sufficient for their purposes. So, we're not saying that they're sufficient for your purposes, but if you read them, like you said, hopefully they can become self-evident.
All right, let's get into a sort of customer verification aspect. This is a whole rabbit hole because it's a very unique one, but give us a quick sort of detail on how this really differs in financial statement audit versus PORs.
Yeah, so in Greg Maxwell's description of proof of reserves, he has the asset side, which you prove ownership of using digital signatures or send to self transactions, basically methods to prove that you can exert control over the private key. Okay, cool. That's the asset side. But how do you get more comfort over the liability side? Well, you have to download a list of liabilities from the database, but how can you actually perform more checks on that? So Maxwell's method was to pseudonymize each user account and then expose that to the public, enabling each user to check to confirm that their liability was actually included within the scope of a proof of reserves. So how he uses the data structure called a Merkle tree to do that. And what that enables you to do is that, hey, there's you could either run some code or we've made it easy to do a Merkle verification where you put in your account details and then you press, submit. And if your details were included, it'll return back with a success and we will find your Merkle leaf in the data set and it will roll up to a Merkle root essentially a summary hash of all the information, proving that you were actually included within the scope. Now, this is completely crypto native. There's nothing like this in CPA land or anything in traditional audit or a test that I've ever seen that enables customers to actually check or verify themselves that they were included in the process. So it's kind of like one of these things that comes out of crypto and can be applied to other places in traditional finance, like the AMMs for Uniswap come to mind. But this is one of those crypto native things that can very much be applied to other areas that is truly a crypto native creation.
To your point on bringing that out of crypto, right? Like, so theoretically, a bank could Merkleize their customer liabilities, their accounts they're holding for people, and now me as a bank customer could go ahead and verify just the same way over that batch, right?
Yes, exactly.
Yeah. Because
Exactly.
that's, I mean, I know, there might not be too many auditors listening, but for auditor friends, that's awesome, right? It's this kind of confirmation technique, and it's something that's after the fact of the report. It's a product of the report. But in my opinion, that's even greater, right? Because it's out in the public. Now everyone can do it. And if there was an issue with it, right, you'd immediately start seeing feedback almost in real time of customers raising their hand. Hey, I wasn't in, right? And it could be addressed and, hopefully in very quick fashion
You
opposed
think about
to,
you think about the deterrent effect that kind of provides, right, to potential, management fraud in a POR process. And there is, you mentioned confirms, just to acknowledge, like, it's not that there is no sort of analog, well, there's no direct analogous like Merkle in a financial statement audit. There are a set of procedures that, again, based on risk and based on the firm's policy, right, they might do some procedures around customer accounts, right? If they're liability, they might go and say, hey, we're going to email 100 of your customers, and a few of them are going to respond, right? We've done that in the past, right, to try and get some sort of comfort. You get very low response rates, but ideally you're looking for a customer. Say, yeah, I'm a real customer. Yeah, my bank balance or my account balance was, half a Bitcoin or whatever at that time.
And Merkle trees aren't perfect, right? Because you need to rely on customers actually participating. And then they need to have a method or an avenue to say, hey, I wasn't included. But be able to actually, tell that to the world or what have you, to actually be able to kind of keep those exchanges in check too. So there's ways to optimize this, but it's pros and cons for each method.
That's what Twitter's for, I think. Something like that.
Fair enough. Yeah.
Like everyone's got a megaphone if they want it. All right, so let's get to another one. So, in kind, what are we talking about here?
Yeah, so right in Jeremy's first example, I put one Bitcoin on Coinbase. So I want to know, I don't want to know that they have the cash to go get me a Bitcoin when I want it. I want to know they have the Bitcoin. Obviously, for many reasons, we're dealing with scarce assets in a lot of our digital assets. So that's one. Two, the volatility, right? There's no guarantee. I mean, I think with the exchange collapses we've seen where customers do get some of their money back, it's a perfect example of this where, hey, it's great they got something back, but as we've seen, it's usually the value of what they held at the time, and they're getting USD, 4 years later, which is not great when you were holding Bitcoin or some of the other assets that have appreciated. So in kind is focused on, do you have what you actually owe the customer liabilities? Do you actually have the Bitcoin compared to the Bitcoin liabilities, and so on down the road? And under audits, right, that if the company owns their own Bitcoin on the balance sheet, that's going to be part of the set procedures is to verify that you have that. When it comes to the customer liabilities, I think with updated disclosures, you guys mentioned statement of digital assets, that will become more of the norm. But at the end of the day, the financials are reported in US dollars, and that's what the auditor is attesting over. So it will be very dependent on the auditor's approach, what's actually in the financials, if they're looking at income.
Yeah, we did a blog a while back. It's been a while, but we actually, I think, did an analysis of this and presented the Coinbase 10K, their Coinbase public filing, and showed how a large percentage of it was sort of, and other assets. And so not, again, it's a supplementary statement they put in that shows the digital asset picture, customer asset picture, better than nothing for sure. But I think there's a lot to be desired there. And then let me just add a point real quick. So a lot of times we describe proof of reserves from the customer's view, from the retail, sort of what the transparency you want. It's a really important thing and customers do want it. once they understand what's possible. But from management's perspective, from the CFO chair again, or even from a board chair, like this is 100% something that you should be focused on in your organization if you're sitting in a finance seat. It is the incentives for product, for custody, for sort of growth teams to think about what they can do with these assets and how they can lever them potentially. Is the incentive is so high to do essentially the wrong thing, right? And that is exactly what we saw in 2020, the end of 2022, right? Celsius is actually one of the collapses that isn't talked about as much as FTX.com, but was a very big and very deep one for retail, right? And so Celsius, Alex Mashinsky, I think actually just pled guilty and will probably do a significant amount of time in prison, which is warranted. But what he was doing was essentially what we know now is, it's fair to say, is basically taking customer Bitcoin and using that improperly to gain leverage, improperly to take positions in other tokens, and specifically in the network token of his own platform, right? To sort of pump the value of the Celsius token. So anyway, like kind is super important. And I think finance pros should be thinking about how they could use proof of reserves to drive a very clear message across the organization that even a yield program needs to be very well defined, very risk bound. And if it's a spot program, if it's spot exchange, spot custody, it's a like kind. Doing anything else is just exposing the organization and the customers to really undue risk.
Yep.
Awesome. So I think in kind is huge. Obviously, I'll get off my soapbox on that one. I think the way that people see these, I mentioned retail, right? Like who sees these reports, it is another thing that people sort of conflate. Like, well, they do a financial statement audit. Okay, but you'll never see it. So yeah, let's talk through this one.
Yeah, it's a great point. It's exactly what you said, right? In a financial statement audit, usually the company will undergo the process, they'll finish it, and they'll say, okay, who wanted this? And we'll send it to them, right? They're going to send it to maybe some regulators for their MTL or their money services business licenses. They might send it to their investors and maybe other people, within the company. But they don't want to publicly distribute this because they don't want to tell the whole world their revenues, their expenses, including, not just their customers, but their competitors, right? What are their margins, all these things. They can't publicly expose these things, right? This is private information. So these are limited distribution reports. On the flip side, for proof of reserves, the reports are distributed to the intended users of the reports that the auditor has in mind. If you think about, I think the best example of these are those stablecoin attestations like Circle and GMO and all these different companies. These reports are available on their website. So current and prospective customers can look at this information and see, hey, is this fully reserved? Is this something I might feel comfortable purchasing, et cetera? So it's a huge it's a huge disparity in the amount of distribution for these reports. And I think that's actually one of the huge pros of proof of reserves. Stablecoin reports have been widely public. Unfortunately, only a few of the exchange or custodial proof of reserves have been made public. But I think that this slowly moves to the way that stablecoins moved, which is doing something monthly or quarterly to demonstrate 100% collateralization of your customer liabilities.
Awesome. Yeah, I don't have anything to add to that. I think that's right. So let's talk about now frequency. I think this is another thing where proof of reserves can, it seems to me, just out and out. It's not that it's better than financial statement audit. It's just that as an addition to existing financial statement audit and even other third-party programs, which we'll talk about, right? Third-party assurance sort of things. Just frequency is important. Crypto moves quick. Yeah, I mean, this one might be self-evident. I don't know if you guys want to discuss it, but let's talk about how frequent it can get. Like we say, as frequent as real time. What does that mean? Is that actually possible?
Yeah. Well, if we start with the starting point with audits, they're typically on an annual cadence, right? They can be more frequent, but it's not. So annually there. Then if we go down to the next level, if we think about like stable coins, that's done on a monthly basis. And we've got some exchanges doing proof of reserves on a maybe every 6 weeks or every 6 months or quarterly, right? So we're getting more and more frequent. And the reason why it can become more frequent is because the scope is more limited, right? You're not worried about the whole company, the whole income statement, the whole balance sheet, every month, right? You're worried about this segment, this limited scope. So, okay, since if we limit the scope, we can move it closer to be more frequent. But then if you think about, well, let's think about the stablecoin example. Well, the bank balances are effectively available in real time. Just your bank statements or your bank portal. The tokens, one of the best benefits of blockchains are that the data is real time, right? At any point in time, you could go look at the token outstanding balance. Well, now if you think about both of this information is available in real time, we could actually report on this as frequently as real time too. So when we talk about potentially real time proof of reserves, this is what we're talking about, is that all the data is available in real time. Therefore, we should be able to report on this in real time. This is 2024 now. Like, it kind of makes sense that we should be able to do this more quickly versus, maybe 30 years ago before the internet, maybe it was a different story. But I think this just becomes more and more frequent, and this is going to become the standard over time that people are going to expect real-time reporting going forward.
Yeah, perfect explanation. I mean, my addition is it's the honed in scope that allows this. And to Noah's point, it's not better or worse. It's just that this is a perfect supplement to your financial statement audit, which again, typically is annually. Maybe there's a quarterly review like public companies do. But because of the honed in scope, we can do this in real time. And it provides, again, it cuts through all the extra accounting, disclosure, reconciliation needs to be done to just say, what do we have? What do we owe? And if we can do that more frequently, it gives a much better picture to the users or intended users of the financials or the reports, right?
Yeah, and I think, Jeremy, you said we don't care about all the other company stuff. And I know you're just speaking in shorthand, but I just want to be clear too, like as a firm putting out proof of reserves, we do absolutely care about, the financial health of the company, whether it's whether it's meeting its other obligations in a regulatory perspective and all of that. Like that is part of our way of engaging with the client, right? So we want to engage with reputable clients. We're doing the right thing all around the business. This is just that we're really focused on one thing. When we say we don't care, it's like all of that is kind of noise when it comes to the proof of reserves, right? And so this report is just really focused on that one thing. And also, that the report going out, right, we have to make sure those reports aren't misleading, right? We think that the procedures are, they're management says they're appropriate for the intended purpose. We have to basically agree, right, to that. We have to kind of say, like relatively knowledgeable intended user reading this report wouldn't draw a misleading sort of conclusion from it. So those are important backstops for us, and also for other for management. Like if you're thinking about engaging in this topic with firms, like think about that too, right? Yes, they're going to ask questions about. You're not going to be able to go get a proof of reserves engagement signed up without probably sharing your most recent financials, trial balance, audited financials, information about your KYC program, information about sort of holistically around the business. These are important things to prepare for.
Part of the thing that you're looking at as part of this process is, hey, what is that segregation or that protection over those customer assets? Like very popularly in stablecoins, there's at least segregated accounts, but there's trust structures, there's stickings in different domiciles. So there's these different ways of siloing the customer assets. So that's definitely something that we look at and report on to ensure that, in a bankruptcy, these things may or may not be protected.
Absolutely. Yep. All right, let's talk about a couple other factors here. And then I think we can kind of wrap it up talking about how proof of reserves further fits in.
I think this one's quick, right? Obviously, with the honed in scope, you've got less cost. Now, when you talk about frequency, there's a chance that it maybe gets closer to that audit level, but generally, more honed in scope is going to be a lower cost. Your audit fees are definitely going to be higher because they have to look holistically at everything. They're going to need a larger team potentially to do that and just more time.
Yeah, and efficiencies, the more frequent, right? These things become very repeatable. Management's reporting gets, just easier to produce, and the custody team is, they know they're doing their monthly signatures. It all becomes very repeatable, and costs can definitely be driven down. So, level of detail on these reports, I think, is an interesting area too. Again, does detail matter if you don't, as a person, even see, if a customer, if you don't even see the audited financials of the company, does detail matter at all? You see sort of nothing versus something. But yeah, I think let's talk about the detail here.
Yeah, I think what's nice about the proof of reserves, right, and I guess I'll talk in the CPA proof of reserves context with an agreed upon procedures, is because you don't issue an opinion page on the agreed upon procedures. It's here's procedures and here are the findings. So to do that, you have to literally put the details of each step you perform. And while I think most users may not have that full attention span as in this day and age, the reality is everything's in front of you to really look and go, what did they do? You can see every step of the way because those standards require us to be very specific in how we did something. So then the findings are able to speak to that. And again, nothing's misleading in it. So I think that's a great step where the audit, again, the opinion page is going to use this language we threw out at the beginning of these are free from material misstatement. An audit, here's what the responsibilities of management were and the auditor, and then it's numbers and the disclosures. And while the disclosures are great to explain what's on the balance sheet and everything, they're not going to get into how did the auditor approach testing. You're not going to see any of that. How much did they sample or not? That won't be included in that.
Yeah, helpful points. So I think the last one, bankruptcy protection, maybe I can take this one. This one's complicated, I think, does a financial statement audit speak to this? Potentially, but almost sort of not necessarily. So I think either of these sort of level reports, I think you can generally think of them as, okay, bankruptcy protection, some wrapper around customer assets is probably a side issue. It might be, very important, of course, but it's a bit of a side issue. In our reporting in the past, the way we've dealt with it is like other management reporting, sort of on the back explaining this. I think from a customer view, you want to like look to the terms and conditions of the parties that, the exchange providers that you're working with, that you're signed up with, to understand, okay, Bitcoin that I deposit to this platform, is this bankruptcy remote? Meaning if the company gets into financial solvency issues of its own for, let's say, a debt issue or some other issue, right? And let's say they basically do have all the customer assets and liabilities are basically reserved. How are those assets treated in that bankruptcy process, right? Or that liquidation process of the company? Very important. If they're under reserved, it's extra important, of course, because whatever's there is, very important to protect. And we've seen this be very, it's very complicated, right? FTX.com bankruptcy process is still working itself out. And so,
yeah, I would love to get some bankruptcy attorneys on and do an episode on that, right? Because I think one of our thoughts is if you had frequent proof of reserves, does that help the case of, look, you can start to build as they do, right? FTX.com, a good example, goes under, then you spend all this time putting the puzzle together to figure out, well, when did it go under? Was it fraud from the start? What was the point of collapse? Well, imagine if there was proof of reserves throughout that process, they could start to see, all right, here's where we have legit pictures of those customer liabilities and assets. So maybe they can start to segregate that. I mean, again, it's all kind of speculative at this point, but definitely a fascinating road to go down.
Yeah. Yeah. I mean, if I was in the management chair, if I was running an exchange, I think this is something that I would really seek out. I think in Europe, it's more common. Jeremy mentioned that stichting concept, sort of a trust type of concept. It was what we would call it in the US. In the US, certainly, you could use a trust company structure, right, as part of the company structure and keep customer assets in a specific legal trust. In New York, I think that that's part of the regulatory equation, of course. So exchanges, based in New York, serving New York customers have a little bit more of that requirement. But yeah, I think it's interesting. Obviously, that would be taking on costs and complexity for the organization. But I think it is a really meaningful difference in the way you're presenting the overall product and safety to customers. So,
and to your point on the overall extra cost, right, just quickly, is eventually retail will look at its different options to purchase or custody, and it's if these trusts hold up in terms of an issue that's not fraud, right, just an economic issue where the company may need to shut down, well, I'm going to go with the one that has the trust, right, and is actually giving me this transparency, letting me view it. So extra cost, but a better product in general usually is going to be good for business.
Yeah, exactly. All right. I think we want to kind of cover off just by like putting, some of this in context in the overall sort of assurance stack. And so, yeah, this is kind of a way I think of these things, right? It's not one or the other. It's, going to be based on the business, the type of customers it has, the type of trust signals it needs to send to those customers or partners or regulators. And there's a whole bunch of different private company, third-party attestation or third-party assurance products, right, that companies use across industries. And so here's, sort of the AICPA view, or some AICPA products, for instance. There's also the international equivalents of these, like SOC 2 and SOC 1 have an international equivalent, of course. But yeah, let's talk through this. Where does proof of reserves fit in the stack? I see it's on the top, Jeremy. So that means it's the best, right? It's the one and only. Okay, Jeremy's not here. Lost him.
Yeah, we lost Jeremy, but I think I could jump in where not none of these, in my opinion, are the best, right? It's part of a full picture that I think ultimately is a good thing that we have these different levels. I'm sure there's extra cost, but it ultimately looks at different segments of the business. And that's where, as we move into this digital age, it naturally makes sense that we have another piece to the stack that is honed in on that scope, just like the SOC 1 and 2 are specific over controls. Proof of reserve is going to be specific on that custody. So I see it as another part of the stack. It's valuable in the sense of when you have the full picture, you're going to have a much better run organization, both internally, as we discussed. Management will have more insight into where maybe improvements need to be made or risk could be managed better. And then customers in general will have more, again, in general, will have a little bit more safety if all these pieces are in place. Yeah,
Yeah,
I think
that
about
was
prime.
I
Yeah.
teed you up in jest there, sort of, like which one is best, right? It's the top of the list. No, definitely not. I mean, I think, yeah, I used to do SOC work for like a large publicly traded payroll company. So not a crypto example, but think of this, right? If you wanted to go run, let's say, a payroll company, there's no way you're getting away without a SOC 1. Like you have to have that for your customers so that they can get their financial statement audit done. It's an absolute necessity. Could I run a financial payroll company without doing a financial statement audit? Yeah, maybe. I probably have some regulator that's going to want to see it eventually. But from an investor perspective, I might be able to get away with for a while, doing my financials, producing them, but not have to have an audit. In a crypto exchange context, you got to have that financial statement audit is a very much a baseline for your money transmission licenses for the MTLs and the sort of international equivalents of those. And then you could say, everything else from there is in some ways elective, right? And so SOC 2, what's more important to your customers? That you have sort of general security, availability, and confidentiality of their data, and you can do a report that says you've got controls around that once a year, or the fact that you actually have their assets. If I'm sitting in the management chair, I'd probably go for the proof of reserves process, because that would drive internal process and control, mature the organization. And then, SOC 2, not that it's not important, but I think that's where I would drive first personally. Most customers aren't going to get the SOC 2 or understand it either.
Right. Yeah. I mean, this circles back to, right, it's important to work with CPA firm advisors that really understand your industry, your business, and can help you kind of prioritize the list to obviously, the needs for regulators, where you got to start to even operate. But then from there, what's really going to improve your internal processes and make sure you're built for the long run and not just to capture a bull market, right?
Awesome. Well, we lost Jeremy, unfortunately, because we're getting some good convo going there. But thanks for helping us finish it out, Nick. I think, yeah, I think we're basically here, right? Is there any other topics you wanted to cover, or do you think we made it?
I think we made it. I think we hit both. Again, the point is that not one better than the other, both complementary. And, we've been throwing out tons of examples, and I got to throw this one out with Prime Trust, right? Prime Trust had essentially the biggest issue for them among a couple was that they had lost keys to wallets that were holding customer custody accounts. And when the news came out, it was found out that they had lost them for, I think it was over a year. Those keys had been lost, right? Well, they had been getting financial statement audits done during that time. And so it's kind of a good example of if proof of reserves were required for them, even if it was just, biannually, just twice a year, during the POR process, they're going to have to prove that they have access to those accounts and be able to either move or sign with those keys. So it would have been evident a lot sooner that we have an issue here. So again, it goes into that complementary piece where if you have both of these running, you're really going to get a much better picture and avoid these kind of wild scenarios that we've seen in the space, or at least avoid them sooner than maybe they're able to have been running in the long run.
Such a good example. And one that kind of goes against that piece that we just talked about around trust and bankruptcy protection, sort of legal vehicles. I mean, that was, wow. Yeah. I mean, that was quite the thing, right? It was like Nevada licensed trust company overseen by Nevada regulators, held, a lot of corporate accounts and sub accounts for customers for cash and digital assets. And yeah, I think, you brought up the technical point of how that'd be tested, but it just goes to show even there, like you got the legal wrapper, you got the trust structure. Okay, well, if you're still not, if you still don't have the best internal process and you're not actually doing a proof of reserves regimen, whether it's internal or attested to outside on top of that, there's big potential risks underneath the surface. So yeah, hey, this is something that we care deeply about, honestly, as professionals. Like we're very passionate about this space, right? We did the first, as individuals with a different firm, we did the first ever Merkle tree proof of reserves over a top 10, 15 global exchange. And that was in 2021. That was the first CPA attested version of this idea. And since then, we've carried forward on the ideas and the thought leadership around this with the digital chambers participation and the practitioner's guide to proof of reserves, which I think is really sort of the treatise. It's basically the most authoritative and comprehensive source on this topic. So definitely invite people to check that out by searching for it. The Digital Chamber Proof of Reserves will get you right to the link to the document. I definitely encourage you to check out TNF.com, thenetworkfirm.com. If you don't know about us, come check us out. Like I said, like and subscribe to the video. You can find us on LinkedIn and Twitter, just doing the old search stuff. And thanks for watching. That wraps another TNF take. Thanks a bunch, Nick.
Thanks, everybody.